Hey everyone, in today's video, we're testing a powerful trading strategy that combines the 50 and 100 EMAs with the stochastic RSI indicator. We'll code the entire strategy in Python, optimize it using Freqtrade, and run backtests to evaluate its performance. Stochastic RSI is a technical indicator that applies the stochastic oscillator formula to the relative strength index values, instead of directly using price data. This results in a momentum indicator that highlights potential overbought and oversold conditions with greater sensitivity. When the stochastic RSI is below the oversold level, it suggests that momentum is weak and the price might be ready for a bounce or upward move. When the stochastic RSI is above the overbought level, it indicates that momentum is strong but possibly overextended, and a pullback or downward move could be on the horizon. Now that we understand the key indicators in our strategy, let's dive into how we can apply them to analyze trends and generate trading signals. To enter a long trade, all of the following conditions must be met. 1. The 50 EMA is above the 100 EMA, indicating a bullish trend. 2. Both EMAs are sloping upward, confirming upward momentum. 3. The gap between the 50 and 100 EMAs is widening, signaling increasing trend strength. 4. The stochastic RSI stays below the oversold level for a certain period, indicating weak momentum and a potential reversal setup. 5. Then, we wait for the stochastic RSI to cross back above the oversold level, a signal that bullish momentum may be returning. Once all of these conditions are met, we enter the long trade on the next candle. To determine the stop-loss level, we identify the most recent swing low and set the stop-loss slightly below that level. To go short, we basically look for the opposite signals. 1. First, the 50 EMA needs to be below the 100 EMA. That's our sign of a bearish trend. 2. Then, we want to see both EMAs sloping downward, which tells us the momentum is heading down. 3. If the gap between the EMAs is widening, that's even better. It means the trend is getting stronger. Next, we check if the stochastic RSI stays above the overbought level for a little while. And finally, we wait for it to cross back below the overbought line. That's our potential signal to enter. Once all that lines up, we enter the short trade on the next candle. For the stop loss, we set it just above the most recent swing high. And for take profit, we go with a 2-to-1 risk-reward ratio. If the price drops and closes below that take profit level, we're out. Profit locked. Now that we've covered the strategy, let's move on to optimizing it using Freqtrade, a free open-source crypto trading bot built with Python. If you want to dive deeper into Freqtrade, check out the course linked in the description. Here's the game plan. We'll test the strategy on the 1-hour time frame. The data will be split into in-sample, 8 months, for tuning the strategy. Out-of-sample, 4 months, to test performance on unseen data. We'll optimize these key parameters. EMA slope window defines how many candles we look at to check if the EMAs are sloping up or down. Stochastic oversold and overbought threshold define the oversold and overbought levels for the stochastic RSI. Stochastic threshold window, number of candles the stochastic RSI must stay in the overbought or oversold zone before crossing. Swing point look back. How many candles to look back to find swing highs or lows for setting the stop loss? Risk ratio defines the take profit level based on the stop loss distance. We'll use Freqtrade's HyperOp tool to find the best settings, aiming for higher profit and lower drawdown. Once optimized, we'll run a backtest to see how the strategy performs with the final parameters. All right, let's take a closer look at the backtesting results. We ran the backtest on TOEN perpetual futures using a 1-hour time frame over the past 1 year, using the optimized settings. Now, let's break down the results. The strategy delivered a total profit of 207%, with 127% coming from long trades and 80% from short trades, which is quite impressive. During the same period, the market only gained 19%, highlighting the effectiveness of this approach. The maximum drawdown was just 12%. showing that while there were some pullbacks, the overall performance stayed strong. Next, let's check out the visual summary of the results. As you can see, the equity curve is in a clear uptrend, meaning the strategy consistently generated profit over time without major setbacks. This also shows the strategy's ability to adapt to different market conditions. If you'd like to download the full Freqtrade strategy file and explore it on your own, make sure to check out the link in the description below. If you found this video helpful, don't forget to subscribe, turn on the notification bell, and share it with your friends or trading community. Thanks for watching, and I'll see you in the next one.